Well, the first crop report since the shutdown didn't elicit a lot of love for the USDA this Valentine season. Leighton has the market report.
Mike, some economists even label that report, the supply-demand numbers, a dud. But we have a report from another group that got a better response. The Cotton Council in Memphis says more cotton acres are coming to the Mid-South in 2019. One grain trader says a trade deal with China may be a bigger deal for U.S. corn than for U.S. soybeans. And a rebound in chicken prices is said to be underway. It appears soybeans will be giving way to cotton across the Mid-South this crop year. The Cotton Council's Planting Intention Survey, released on Saturday the 9th, indicates there could be over 13.5% more acres of cotton planted in the Mid-South region than in 2018. For the state of Mississippi alone, the increase in cotton acres could amount to an 18% boost compared to a year ago. The estimates come from a survey the council mailed to farmers in December in the 17 states making up the U.S. Cotton Belt. Trade talks between the U.S. and China were underway again this week in Beijing. As you heard earlier, deputy-level meetings started Monday, with the high-level discussions picking up after that. In a typical year, soybean prices tend to rise into the spring, but analyst Elaine Cobb says the likelihood of that kind of action may be fading, given the continuing trade unrest.
The expectation for soybeans for the past couple of months has been waiting and waiting for good news, like actionable good news, not just a rumor, some evidence that China is going to be buying lots and lots of million metric tons to make up for that hole that we have from November and December. And that hope seems to have faded away. I think we've seen the soybean market come up 15, 20 cents, which has been good, but then the options traders have sort of stopped their appetite for call options that would imply this big upside potential for that trade scenario being fixed. That seems to have faded away. I mean, it really depends on the trade negotiations. If there's no evidence of something changing there, then maybe there is no reason for folks to risk storing these old crop soybeans that you don't like to store into warmer weather. Perhaps this is an opportunity.
Meanwhile, another trader is of the opinion any kind of new deal with China may actually benefit U.S. corn more than the U.S. soybean market. As he tells it, Ted Seifried thinks corn has got a good story behind it. He explains his thinking on this in a little more detail and what it could mean across the grain sector.
A trade deal with China, in my opinion, is almost a bigger deal for corn than it is for soybeans. You know, we've been talking about a huge shift in acreage from soybeans to corn. Well, if we have a deal done with China and China starts buying business as usual again, we're not going to see as significant of a shift in acreage. And in my opinion, the acreage story, or the larger acreage story, is the one thing that's holding corn back from having a really friendly sort of bull market. We've had record caliber production for 5 years in a row, yet we still have declining balance sheets domestically, and I'd say globally as well. So corn's got a good story behind it, unless we plant 93 or 94 million acres of corn. If that happens, well, that certainly kind of puts a big wet blanket on that story. But I don't think that's going to happen for a number of reasons. And if you look at corn spreads, they don't really buy into that either. And the corn spreads right now are probably one of the most friendly indicators when you look at charts and things like that.
Analysts saw a few surprises in the February 8th supply-demand report, the first since the government opened back up for business. Meanwhile, that same day saw the release of the quarterly grain stocks report by USDA. December 1 corn stocks were down over 4.5% and below the average trade estimate. Soybean stocks topped 3.7 billion bushels, a jump of over 500 million bushels from 2018. Wheat stocks totaled almost 2 billion bushels in storage. Well, time to check out our trivia quiz for this week. Our question is about the sunflower, specifically the oil that can be obtained from the seed. So here we go. What country imports the most U.S. sunflower oil? Is the answer A, Mexico, B, Canada, C, Germany, or D, Argentina? We'll have that answer coming up in a moment. We take a look at livestock markets next on Farm Week. Securities analyst Jeremy Scott says he sees beef packer margins continuing to trend favorably as we move on ahead in 2019. Meanwhile, trader John Roach sees some down pressure for a bit in the live cattle pit, but better and higher prices ahead.
We're not negative on cattle longer term. We think this cattle market can still move better into the late spring, but right at the moment we've run about as far as we can. The dressed beef came under pressure, and so the market is stalled out here for a moment, and it may take a little bit of time to get through. We don't know for sure how much weight we've lost in cattle and how much we've backlogged, and so our slaughter numbers out forward are a little bit uncertain at the moment, and so we think we kind of shake that out. We think the market will come on higher.
Also coming on higher now are chicken prices. Steiner Consulting says that a recovery in prices in this sector has been underway since early December. Analysts say a combination of improving demand and limited supplies are building the recovery. They point to the fact that chicken wing prices last week exceeded their 5-year average for the first time since 2017. And the price for whole birds is also said to be climbing. Back to the trivia quiz now to close out the markets for another week. What country imports the most U.S. sunflower oil? The answer is B, Canada. Canada, in fact, imports over 20,000 metric tons of U.S. sunflower oil each marketing year.